Tesla stock investors finally got some good news as the company said it was raising prices instead of slashing prices. The company's going to increase prices in the US and Europe on one of its flagship models, and that has significant implications if it sticks. So in this video, I'm going to review those latest developments and what it could mean for Tesla stock investors and for the industry overall. So let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. I mentioned already that this was great news, and the company's stock price jumped following these announcements. It was up roughly 6 or 7% on the day following these announcements. Tesla stock were trading at $167 per share after falling significantly in 2024. They're now up to $174 per share following these announcements. So what were the announcements? Well, Tesla said it will raise the price of all Model Y vehicles, the most popular selling vehicle in the world, in the United States. Per the company's website, Model Y cars will increase $1,000 on April 1st, 2024, and all trims will qualify for a $7,500 federal tax credit in the United States. Furthermore, Tesla stated that it will increase prices in Europe roughly 2,000 euros on the same Model Y. So huge moves here, increasing the price. Now, a $1,000 and 2,000 euro price increase is not all that significant on the surface, but it's what it signals that's more important. Now, unless you've been sleeping under a rock for the last year and a half, you'll know that the EV industry is in a major price war. Prices have been getting slashed at EV providers worldwide. Tesla's been cutting prices. I've lost count how many times Tesla cut prices in the last year and a half across the board on all its models. Rivian recently joined the price war. Lucid's been cutting prices. Fisker cut prices. Fisker might go out of business. And other EV makers, notably in China, have been slashing prices as well. Ford and GM cut prices on their EV models. And it's just a price war everywhere. And that has negative implications for industry profitability. If they're cutting prices and everyone is cutting prices, then that's profit margins decreasing for everyone. The goal, the aim, is if you cut prices and your competitors keep prices the same, then you have an advantage because you're now at a lower price compared to your competitors, right? But if you cut prices and your competitor cuts prices and you're now at the same comparative position where you started, then you're not really gaining any market share. You're making it more favorable for consumers to purchase, and depending on if you get more buyers or not will determine if your profit margin falls or rises. Because if you lower your prices and it causes consumers to purchase much more of your product, then you'll benefit because the lower price will be offset by an increase in units sold. But that hasn't been what's been happening with Tesla and other EV makers. Lower prices are just leading to lower profit margin because there aren't that many more buyers of EVs. Demand is tepid, and even with these price cuts, consumers are saying, meh, it's still too expensive compared to legacy automobiles, compared to the inconvenience of owning an electric vehicle, compared to owning a legacy automobile, right? And so it hasn't spurred increasing purchases, and you've seen Tesla's gross profit margin collapse from up towards 30% down to 17.63% in the latest quarterly update. And I wouldn't be surprised if this continues moving downward, given the lack of growth and the lower average selling price compared to where it was previously. So this price increase has major implications if it sticks. If it sticks and Tesla doesn't just have this a temporary one-off increase and it's more of a sustained higher price, even if it doesn't continue increasing price, if it just raises the price and just keeps it there and stops cutting price, and it makes it known to the industry that it's not going to cut price anymore, and see if industry participants follow it upward, just as industry participants followed it downward, right? When Tesla cut its price, competitors didn't want to lose market share, so they cut their price. Now that Tesla increased its price, if competitors feel confident that Tesla is not going to cut anymore, they might follow suit and raise their prices as well. And so now everybody's price is higher. And so when consumers go out to purchase, they're looking around and it's the same thing. Tesla's this price, the competitor is this price, and the relative position didn't change, but the overall price is higher, leading to better margins for the industry and worse prices for consumers. But it might be a little too early to tell if that's the case here, because Tesla has made these little one-off price increases before and then proceeded to slash prices more than it increased them. This could be due to some supply chain problems it's having. Remember, the company had a fire in one of its manufacturing facilities that's going to decrease production. So it could be in response to that. We don't know yet. It could also be a response to lower production overall. We've been seeing some rational behavior in EV companies, which has been surprising. Finally, right? EV companies have been demonstrating some rational behavior. They've been cutting supply. They've been restricting new supply, new models. They've been pausing or canceling new manufacturing, right? Like we saw from Rivian. It was working on a second manufacturing facility, and a few weeks ago it said, why? Why are we increasing manufacturing capacity when we're still only producing a fraction of our current capacity? No need for more production, right? In fact, what the industry needs is significantly lower production. It needs to lower production because consumer demand is growing much more slowly than supply is growing. So overall, I think this is a great move for Tesla. And you can see over the last 90 days or so, let's say 60 days, Tesla's prospects have worsened. Its earnings per share estimate for 2024 was $3.74 60 days ago. And then 30 days ago, it fell to $3.08. 7 days ago, it fell to $3.05. And the current estimate is now $2.75. So just in the last month, in the last 2 months, its earnings per share forecast for 2024 has decreased by $1 per share. And similarly for 2025, in the last 60 days, it's fallen from $4.90 to $4.19 to $4.16, and finally all the way down to $3.74. So its earnings per share for the next 2 years have fallen by $1 for 2024 and $1.16 for 2025, roughly 25% and 20% decrease in the earnings per share forecast for the next 2 years. And this is for a company that's already trading at a premium valuation compared to other automakers, because Tesla is seen as a more innovative company. It has a more of a tech stock valuation than a car company valuation. But if it's not going to be growing and it's not going to be increasing earnings per share, and those forecasts are coming down, then the valuation premium starts to come down, which is what you've been seeing lately with Tesla stock. Used to trade at a forward price to earnings of 120, and that enthusiasm has decreased. Now it's trading at a forward price to earnings of 40, a much more reasonable valuation. Nevertheless, the news that came out today is great news for Tesla stock investors. The next move is to hope that the industry participants follow suit and they increase prices as well. And they announce more supply cuts. And they announce less advertising. And so the competitive pressure in the industry starts to ease a bit, and thereby bringing the industry in better balance. The problem for Tesla hasn't been Tesla itself. It's been more of an industry problem. The EV industry has been a terrible one to be in for the last 2 years. And so it's not that, Tesla's the best, I would say arguably the best-in-class EV company, or one of the best-in-class EV companies. The problem is that it's still an EV company, and that industry is in a terrible position. So this move will bring it into a better position if it's sustained and it's not followed by price cuts in like a month or in 3 weeks or something like that. And then if competitors follow suit and they increase prices, then boy, is that great news, because now you've got easing competitive pressure, which is great news for investors in all of these EV companies worldwide. So great news to be sure for Tesla stock investors. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.